What's up? Good morning, everybody. Hope you guys are doing well. Hope you guys are having a good week. What's up, Lana MK 9583? Good morning. Welcome in. Sorry for the delay here. Just a minute. Had to reset my streaming software. Stopped working. But let me know if you guys can hear me, see my screens here. Bookmap right now. Good morning, Owen Enterprises. YouTube rejected my comment. That was weird. Unless that wasn't me. I don't know. Good morning. All righty. So we'll go through analysis today. I'll share with you guys the things that I'm watching out for today. Not a whole lot has changed so far this week. Kind of the same range that we've been in. So if you're tuning in for the first time this week, I will go over the analysis again here and share with you guys what I'm watching out for. Been in a large consolidation range, both on a multi-month time frame and the last couple of weeks specifically. Good morning, Zach. Good morning, Stoic. Good morning, Johnny. Welcome in, guys. Welcome in, welcome in. Hope you guys are doing well. Hope you guys are managing these sideways market conditions that we've been in for a few weeks, few months, really. Get my charts a little situated here, guys. One sec. So I'm going to go over ES and NQ, S&P 500 and the NASDAQ. So are what I trade primarily, futures and options. But we'll go through what I'm watching here. Just take a look at a daily chart here. You can see this range that we've been in, and I'm kind of watching out for this resistance area up here, the support area down here, going all the way back to October, November timeframe. This is a daily chart on ES. So within that, near the middle of that, you can see for the last 2 weeks, we've basically been in this balance range here, kind of in the middle of this multi-month range where the market has been very undecided on what it wants to do next. There's a lot of fundamental and technical factors going on here, kind of mixed things. I'll briefly touch on, let me pull up my market AI tool. That kind of gives me a nice overview of different fundamentals, different news events, and things like that. Helps me kind of keep track of everything in one place. Give me 1 second, pull that up. We'll go through that in a minute. We have some news today, not so much planned news today. We have more news tomorrow and Friday. So today's Wednesday. Yeah, we have more news Thursday, Friday this week, I believe. Pull up my filters here. Yeah, so not so much news today. We do have crude oil inventories at 10:30, so we'll see. That's more of an effect if you trade crude. But Thursday and Friday, we have jobless claims on Thursday, tomorrow. Friday, we have PPI and Chicago PMI news coming out, which can have a higher impact on the markets. Good morning, Clayton. Good morning, Stelios. Good morning. Can you see that? Ahmad, George, good morning. Welcome in, you guys. So you can see we've got this range that we've been in on the higher time frames. We've got this range that we've been in here on the quote unquote lower time frames, the daily chart here for the last 2 weeks. So within that, I generally look to fade the extremes at the highs and lows until proven otherwise, until we get a breakout. So my main focus has just been, playing reversions in this range, or, if we see a lot of pressure towards the highs, kind of scalping it into the break of the highs and using the highs as a take profit point. That's kind of what I did yesterday. I took a long for about a 12-point profit here on ES. We can drop down in the lower time frames to see it. But basically, it was a long into using the highs around 6,900 as a target once we saw a lot of buying pressure all day. Just a little scalp. But at any rate, what I'm watching for now that we're kind of up here at the extremes is to see if we get a true breakout going back towards this higher time frame range. We also have kind of this trend line that held here multiple times, these lower highs. So that would be interesting. Be interesting if we kind of stutter there, pull back, and then rally and break through it up into these highs. That would be interesting. Get rid of some of this. So this is that range. Let me drop this in my chat here in Discord. And let's take a look on NQ. What the heck? Share it on here. So daily chart on NQ as well. NQ, similar higher time frame range over the last few months. You can see around above, 26,000, 26,200 has continuously act as a major resistance area. On the downside, we've seen these prior lows where this has been a major support area around 24,004, 24,200-ish area above that. So you can see we've basically been mean reverting again and again inside this range on the higher time frame over the last few months, again going back to October, November. Very similar ES, with the exception of it's been a little bit relatively weaker on NQ because of some AI disruption fears in the software industry. That's a little bit more heavily weighted on the NASDAQ, right? The tech sector is a little more heavily weighted, and that kind of sector has been the leader of the losers so far this year, right? Especially with things like Microsoft, big down, Palantir, big down, etc. All right, so we kind of had these lower highs. Now, NQ is a little bit more at the lows. And actually what I've noticed kind of yesterday and today is now NQ is forming a little bit of a bottom, a little bit stronger, and kind of pushing back up out of the lows of this range a little harder than ES, potentially. So we'll see what happens with that. Again, this is kind of, let me clean this up. This is kind of this multi-week range that we've been here. Now, again, this is a daily chart. So like 1, 2, 3, 4, 5, 6, 7, 8, since 9, almost, 2 full weeks in this range almost of trading days. So again, when the market is in a balanced range, buyers and sellers roughly are agreeing on price in that range. We have a bell curve volume distribution. We typically see, quite a few mean reversions until one side breaks one way or the other, right? So that's what I'm watching here, this range. So today, we've bottomed at the lows of this higher time frame range for a while. Like this is that higher time frame range where we bounce, 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 bounce. We've bottomed out here for a little while now. Bulls have been holding it. It was looking kind of heavy, the fact that we were holding down here for so long, right? And it still could go either way, right? But I'm cautiously watching. If we now break and hold above this structure, we may be headed back towards this area. If we fake out again, hold under somehow, then, we may break down, right? It's still up in the air. Nothing's, nothing's ever 100% in trading, right? But we do our best to make educated bets. So what I'm watching for is this range. If we get above it, if, buyers are strong, defending pullbacks above it, and sellers are weaker, then I'll possibly look to take it long, probably targeting these highs and then targeting up here into these highs. Today, this week, I don't know. This is still kind of the overall game plan kind of going forward in these conditions. However, if I continue to see exhaustion, right, on failed break above and we drop back in, then I'll once again be probably looking for the mean reversion shorts on the failed break back into the middle, or vice versa, right? Until we get a solid break and continuation one way or the other. Right? Drop this in the Discord. Okay. What's good, Leon? Welcome in. Nice to have you guys in here. So let's get a little bit more specific. Let's take a look at my 4-hour chart here on Tradeovate, where I've drawn a volume profile over this range that we've had for the last couple weeks. Again, just reiterating, we're kind of building a bell curve volume distribution here the last couple weeks. And what that tells me is, the majority of the volume is built here within this value area. That's the 70 percentile of all the volume transacted, right? And so you can see a declining interest of buyers and sellers to continue above or below there, right? So the market's viewing this as expensive, this as cheap. Buyers buy down here, sellers sell up here, right? Simple auction, right? So, what I'm watching again is these failures. If we continue to see declining volume, exhaustion from buyers or sellers at the highs and lows, which typically reverts back in quickly. Again, that's going to continue to be the game plan until something changes. You can see the point of control here. That's just where the most volume has been transacted. It's kind of the midpoint of the most volume that's been transacted here. It's kind of around 68.80. That's pretty similar to where it was yesterday. This expanded slightly higher because we built a lot of volume near the highs yesterday. We built a lot of volume at the highs yesterday after a pretty substantial amount of buying all day after we faked out the lows, right? So as far as my trade yesterday, it was around here. Once we had the fake out of the lows, buyers recaptured, the middle of the range. Then we saw a significant defense from buyers here. I basically scalped this move from where was it? Around 68.80s into 6,900. Right. So that was my trade yesterday. If you guys are in the private flipping futures group, you guys saw that and the whole breakdown of that. So today, now we are continuing the strength so far from yesterday. Look at this green candle here on the 4-hour chart. Again, this is ES 4-hour time frame with a volume profile drawn specifically on this period. Right. So we had a fake out dip of the lows of the balance range. We had a strong rally that got defended above the midpoint and continuing to see a lot of aggressive buy pressure into these highs, right? So that is setting up for a potential breakout here. But again, I don't want to fancy dance it until we get strong confirmations of acceptance above this range where pullbacks hold. In that case, I'll likely be looking for longs, probably targeting first just this area up here. Again, this is that higher time frame area that's been repeatedly resisted breakouts up near all-time highs. So like around 7,000 to 69.80, 69.70, this area, right? And you can see this was the last area where we built a lot of consolidation. So a supply zone, right? Passive sellers were here absorbing price, and then we sold off aggressively from it, right? So that's a supply zone that I'm watching. So I would likely, if we break this structure that we've been consolidating and hold above it, that would be the next area that my eyes are on to use as a target or a potential short later on if we once again see a failure there, see supply there, and reject. Okay. To the downside, again, if we do, fake this out again, get a strong drop back in, then I'll be looking to use that for a mean reversion back towards the middle of this range. And again, if today by some, this seems like a stretch day, but anything's possible. If we break all the way back down or this week and break really under this range, I would want to see a strong break kind of under 68.40s to 20s where pops fail below to target 6,800, target a breakdown under 6,800, these prior lows around 67.90, 67.80s. That would be like the nearest thing, right? So far, though, we're seeing a lot of buying in the pre-market. Although, is it just me, or have you guys noticed it's like every pre-market and overnight session lately has looked really strong and trending, and then it gets absolutely rug pulled in 180s right after the 9:30 bell. Have you guys noticed that? It's like we get a directional move, and then as soon as the regular trading hours open, whoop, rug pull, reverse right back down, or vice versa. I guess that's pretty typical of a balance range. Pretty typical, right? Buyers and sellers are just duking it out, and the second they get one side or the other gets some leverage where the other side is trapped a little bit, they're, everybody's piling in to put the other side in pain, right? And that is the auction just battling back and forth in a balance range. So decent bit of consolidation here in the pre-market. Let me talk about NQ. I'll show you the volume profile in there as well, so you guys have that. Right. So again, similar stuff. Although it kind of, since the dip, you can see that fake out dip yesterday did not even break these prior lows like it did on ES, and the buying looked to sustain quite a bit more actually on NQ, which was interesting because it's been relatively weaker. Now it's possibly flipping relatively stronger. Maybe if we do recover and rally towards the highs here, NQ has made a relatively lower low overall on the higher time frame. So now if it recovers and rallies into the highs, maybe it has more room to make up more exaggerated rally back. I don't know. See. So again, volume profile drawn on this area from the last 2 weeks where we've been in consolidation. You can see the bulk of the volume transacted in there. For the most part, breaks above or below have failed, and we've just continued to mean revert in this area, right? So what I'm watching here, which we've already kind of broken over these prior highs here on NQ. Have we done that on ES? Not yet. Not yet fully like broken over these prior highs. NQ is kind of leading here, breaking over this structure already. ES has not yet. Okay, interesting. So get rid of this, don't like that. So you can see how we faked out those lows. We came back up, strong buying all day yesterday, held this key area right at the highs of this range, and now continuing higher. So this will be interesting context if we break out of these highs, pull back today. If we get some kind of a pullback, that looks good for an entry where we see strong buying defend, possibly hold above 25,000 to 25,150-ish area. If we break this and then hold pullbacks above there, that would be interesting for a possible long scenario. Again, targeting this kind of area that's been higher time frame resistance here, up there, right? Again, just for an intraday trade type move. However, if we again fail to break these highs, recapture back in, then I'll likely be looking for another mean reversion back around 24.8, 24.850-ish area, right? Roughly around the heart of this range. Again, if today, this week, whatever, same scenario to the flip side here, we get weakness and break under this range and continue down, all bets are off. We could trend lower in the near term for a while then. What time frame do you wait for confirmations to determine what side wants to be on, whether it's upside or downside? I don't look for candle chart patterns for entries. I'm not looking at a specific time frame of candle charts. I'm giving you my analysis overall. I'm using order flow tools like Bookmap and footprint charts to read the auction in real time above or below key levels like this. One, to get my entries from, to manage my risk from. So, I'm confirming my entry based on the auction that I'm reading on the order flow patterns and things that I see on the order flow. And so that would have an invalidation point. So my stop loss is where that is invalidated. So the answer to your question is no. I don't have a time frame that I wait for, right? But generally speaking, like on a candle chart, I would look for, if I was purely just looking at price action without the benefit of precision from order flow tools, then, I'd be kind of looking for basically like a double top on a failed break of the high, where we have a little bit of consolidation, and then a break under where we hold a lower high type of thing, right? You could do that to get an entry, and then maybe a stop loss type of thing, and then target the mean reversion, right? You're just not going to have as many confirmations with as much confluence and as much precise of an entry doing that with a candle chart as you can with things like order flow on Bookmap, footprint charts. There's other really great tools that I have yet to evaluate, like deep charts, etc. But buyers are still applying a lot of pressure here in the pre-market to these balance range highs. And one scenario that is a little that I'm kind of seeing could happen here is if, like, right off the open, we just blast higher and we continue this buying strength that we've kind of seen, and we just trade straight up. Likely, I'm just not going to take any trade. I'm just not going to have a setup, unfortunately. So if we just blast higher right off the open, no pullbacks, and we just shoot to the top of this higher time frame range back up near 7,000, I just don't have much of a setup for that. So it just won't trade. That is a possibility. If I do have like a momentum type trades, that is like kind of like a break and retest, kind of like an ORB type setups that I look for, I will potentially look for that here if we do have a lot of momentum in the first 15 to 30 minutes, and scalp that to the upside. But we'll just have to see how that develops. See if it develops a setup. If it just blasts like one way with zero pullbacks and nothing, I don't just chase a move on a breakout like that. There's no like repeatability, risk versus reward, etc. there for me. Any advice for traders who are eating a lot of stops and break evens last 2 weeks, or see the move go without you? Timing seems very difficult since of late. Yeah, that's just the nature of very sideways markets here. So my top advice for that is, one, do less, right? Don't overtrade in the middle of the range, right? So you need to stay more patient, more disciplined, avoid low quality trades in the middle of the range. Look at this, we're getting a breakout now. So, in the heart of this range, you want to bear in mind when you're looking at the intraday price action, remember where we are. Look at this 4-hour chart over the last 2 weeks, right? Remember where we are. Even looking at the 4-hour chart, there's more wicks than candle bodies here, right? So price is just whipping up and down and up and down and up and down. This has been a difficult month for a lot of even professional full-time traders. I've seen across the board different strategies. I've seen a lot of people mentioning that, myself included. I made good money the first week of this month, and then since then, I've kind of chopped around a little bit. Some wins are still larger than losses, but it's not like I'm on a hot streak right now making a ton of money in this. I wish I could say I was, but I'm scratching profits, squeaking out here and there. But I have not had a lot of like big banger winners this month since the first week. Just truthfully, right? That's just the nature of the conditions. So my advice would be to sit back, observe the extremes of the range, and look for opportunity there, right? And generally speaking, when we have such a well-defined and resisted range, I continue to look for mean reversions until proven otherwise, right? Just assume we're going to have, when we have a solid breakout, solid balance range, we're likely going to mean revert in that range many times before we get a true breakout. So 1, 2, 3, 4, 5, 6, 7, kind of 8, question mark here, right? So we have failed to break out of this range 7 or 8 times now and mean reverted, right? So if you're constantly looking for a breakout and not waiting for it to actually be a true breakout with confirmations, then you're going to be just racking up losses. If you're trading in the middle, right, price is very whippy. It's hard to get continuation on a trade, right? So you're likely going to eat a lot of break evens or stop losses here, right? So understand the conditions and how to position yourself. The best, in my opinion, the best opportunities in these conditions is just looking at the extremes of the range and waiting for that to get an opportunity. Or like, for example, yesterday, right? We wait for a failed break of the extreme of the range and then see the momentum coming in that's going back towards the other. And then maybe you can find a scalp with all of that, to target, if we just faked out this end of the range and now we have a ton of momentum back to the upside, now that's context that we can use like I did yesterday to take a long and then target the other end of the extreme of the range. Right. But I would say do less, trade less, look at the extremes, zoom out, don't get hyper focused on order flow, on price action in the middle of the range. That would be my best advice pieces. Great questions, guys. Great questions. I got just a minute here. I got to drop. Again, for those of you that are in Flipping Futures, we'll be live for the live trading session as always. If you guys aren't in there and you're interested in joining, links below. I do live trading, coaching, and mentorship for the people in the Flipping Futures community. If not, thanks for joining in here to the pre-market analysis session. Been having good attendance, good questions, and people have been getting value out of this. So I'll likely continue to do these pre-market sessions with everyone to go through analysis and setups that I'm watching out for. I didn't touch too much on fundamentals today. Not too much has changed other than the fact that we are kind of waiting for news tomorrow and Friday. There's not so much high impact news today. Every day, like the overall sentiment that I'm seeing, like on the overall like AI analysis of the markets, is like market is neutral, slightly bearish, market is neutral, slightly bullish. So it's just kind of flip-flopping back and forth. Market is generally neutral here. So let me just answer this one last question, because this was a good question. Abyss asked, when confirmed by absorption, when is the best time to enter a trade? There's always a chance of a stop hunt. Yes, generally speaking, like say we have a rally into a high that we know is a supply zone. We see a lot of effort, aggressive buying for a period of time. This is one piece of information, right? Generally speaking, if we rally up into a zone and we just see like one large buying absorption, right? And the market pauses here for a second, that is not necessarily a good enough thing to like just take a short entry there, right? And then have a stop over the high. Likely you could get swept several times. Generally speaking, you'd like to see absorption over a period of time, 30 minutes, an hour, whatever, multiple attempts from buyers to break out over this area, and maybe even they do briefly and it's rejected, right? But this is still building, right? You can see this, especially if you see a fake out that reverts. You can see this and get a more speculative entry here after absorption has failed and lower highs have been put in, or a fake out has been put in, right? And your risk over these highs is smaller, but the probability is lower. Call it like, that would be like 30 to 40% maybe win rate entry if it's got good context and location behind it, right? Or you can wait until aggressive selling comes back in. This is my most preferred entry. And then you get like a little pop back of weaker buying. Ideally, if you can get just a little pop back of weaker buying and then have an entry like here, right? And then your stop is maybe just over here. So your stop loss is slightly wider, maybe a little bit wider, but confirmations is better, right? This is going to have still a high risk versus reward, but a little bit lower, right, than trying to catch the absolute top. But your win rate is going to be much more, much better, right? Because there's going to be more confirmations. We've now confirmed there's aggressive selling trap. Now we know these this absorption is likely getting trapped because now aggressive participants are putting them under pressure. And then when we see, a weak pop, like a last breath from buyers trying to get back up there, and then it fails, then it's like, that's go time, right? And then, likely we reverse from there, right? Sometimes you don't get this. Sometimes you don't get a pop back and it just smokes down, and either I miss it or maybe I get an entry a little bit lower, right? And maybe that's now, a 70% win rate entry, but risk versus reward is more like 1-to-1 or 1-to-2, right? Because now your risk is up here, you're down here. You've got better confirmations with the aggressive selling and the trap sellers, but depending on the location, right, maybe you're now a lot closer to a target. So now it's a better win rate because we know it's happening. Selling is coming in, but your risk is wider for where it invalidates the trade, right? So you have to understand those different things and play with it. Now, I will tell you, on balanced range conditions, when we're having fake out at the highs and lows, I am quicker on the trigger to take an entry on the fake out, targeting the mean reversion, because there's just more juice to squeeze here, right? And that's a high probability in that conditions of a fake out. Now, in a trending market, right, you do not want to be trying to catch each high at the first sign of selling to reverse that. Does that make sense? So context and location also matters is very important, also combined with the type of entry model that you're using for that. We could talk for hours on this. That's just a high level little overview, right? All right, guys, that's going to be a wrap. Thanks for tuning in here. I'll see you guys back in here tomorrow for pre-market analysis, again, 8:45 a.m. Eastern. Thanks for tuning in. Great questions today, guys. And I'll see you back tomorrow. For those of you in flipping futures, I'll see you guys over for the live trading session in just a minute. Peace.